I'm Imtiaz.
And I'm Raymond. At OMFG, we always ask, what would you like for us to cover when it comes to personal finance?
We hear you loud and clear, guys. And for today's video, we're going to talk about basic investment products ranging from stocks and bonds and how your investment portfolio should look like.
Let's get straight to the point and go over the difference between saving and investing. We all know that saving is important, and we explained why in our earlier videos, but how you save is also important. It's always good to have liquidity. By this, we mean easy access to cash for the purpose of your daily and short-term expenses.
That's right, you don't want your credit card bill to come in and realize you can't pay it off because you had it locked in an investment. This is why it's important to have savings that you have direct access to.
So where does investing come in? Investing means you're putting your money into something with the expectation that you won't be losing your buying power for the future, and also netting a profit. Why is this important? While you could just put your money into liquid savings, the value of your dollar won't be as powerful because of inflation in the future.
So for example, 0.8% interest from a savings account that the big banks offer will not cover the average 2% inflation rate every year. Historically though, with investing, the average rate of return around 7% is considered good. So if you want to make the most out of your money, it's important to invest.
When it comes to investing, you have endless options. Some can range from real estate, cryptocurrency, the stock market, even something like Pokemon cards.
At OMFG, we don't want to get too technical about what you should and shouldn't invest in. This is a topic that can go on with endless reading, researching, debate, and our goal is really to break it down to the points that matter to you millennials.
So we'll give you a rundown on an investment strategy that we both agree on and is mostly a do-it-yourself portfolio for investing. Let's start by going over typical components that make up an investment portfolio. There are two main parts to consider for your portfolio: fixed income and equities.
Remember these two terms, we're going to go back to them a lot. Fixed income represents some safe investments like bonds, and equities are things like stock investments, which for the most part will make up a majority of your allocation while you're young.
Let's go over these allocations in a little bit more detail. Bonds are considered to be the safe part of your portfolio, like we mentioned above. To summarize bonds quickly, think of it as money that you're lending to a big company or a government.
You know they are safe because they are a large and stable company or a government body, which in theory shouldn't be going anywhere, at least we hope. They will generally guarantee you a fixed interest return as long as you lend it to them for a fixed period of time.
Stocks are the riskier part of your investment portfolio, but they also generate more return. In short, high risk, high return. You have to be comfortable with the fact that the part of the ride with investing with stocks and equities is that there will be lows that you might have to ride out during a recession. Remember, investing is for the long run, not to make a quick buck.
You can pick stocks from publicly traded companies such as Google, Apple, Facebook, the list goes on and on. It's very hard to predict though which stocks will do well and which will do poorly, and that there's always a risk that the stock will not be performing well and you might end up losing some money. It can also be really stressful trying to figure out which stock is the right one. In reality, no one can predict these things all the time, unless you're either in insider trading, which is highly illegal, or you have a crystal ball or time machine.
Since obviously we're not psychics or have a time machine, we personally do not handpick stocks for the most part. We think it's a lot of effort to keep track of this stuff, and the last thing we want to do is stress out about how our stocks are doing constantly.
Instead, we prefer using a strategy called index investing, or more specifically for Canadians, the Canadian couch potato strategy. And this is something we'll get into in the next video.
In the meantime, let us know in the comments below if you invest and your reasons for doing so.
Please like and subscribe, and let us know if you want us to go over any other topics. We do weekly personal finance videos for you millennials, and we want to keep doing it every week to help you out.